From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. I'm just so excited to be here with Kyle Rudder. I'm Nadine Blaney.
I'm Kyle Rudder. Excited to be here or excited to be here with Kyle Rudder?
Excited to be here with Kyle Rudder.
Oh, okay.
Yeah,
that's nice.
it's a Monday.
It is a Monday.
A day where the markets are like looking bright. There's a whole prospect of wonderful things to happen.
Yeah, let's have a look at where that market is sitting or where it closed. The CBO 200 up by around about 1%. There we go, 1.02%. The ASX 200 up by slightly less than that, around 0.956%. We'll call it. But hey, it looks like a debt deal will get done. It needs to get through Congress, of course, but it would seem to be that that's what this relief rally is all about.
Relief rally, but you know, we had been poised to have a pretty good start regardless, because it was, even before the resolution came through, it was a really positive session in New York on Friday. In fact, global markets rose. There's still this enthusiasm, this AI enthusiasm. Why are you laughing?
Because it's one of those things you can slap AI on anything, can't you? And it just seems to be just the buzz, right?
And that was the conversation I had with Henry Jennings from Markets Today on the small caps, because then everybody goes, oh, well, if I'm not in NVIDIA, if I'm not in Microsoft, or if I have some already, must be a way to play it here in Australia. Look, there are some companies that are loosely related to the AI themes, but you should have a listen to what Henry had to say. And that interview will be up online shortly if it's not already, ausbiz.com.au, of course, if you're listening to this via podcast form. So yeah, there's all of that enthusiasm out in markets, and there's just this sort of, I don't know, is it a willful ignorance when it comes to that inflation data, the fact that it's so sticky, the fact that we've now got 50-50 market pricing for a Fed hike coming through in June. In fact, a guest I was talking to today said, oh, expect June and July. Like, that's what will happen.
July as well.
Yeah.
Oh, wow. Yeah, well, it just we spoke about it earlier this morning, didn't we? And I was looking at the futures, the Fed Fund futures. Again, that wasn't in the price last week, or wasn't in the price before the inflation print on Friday night. So it speaks again to that sort of stickiness potentially that we saw in the UK. It seems to have been backed up in the US data. One has to wonder, well, you know, how aggressive, or how many more hikes could there be from here? Yeah,
well, look, I spoke with Mark Todd from the Bank of China that said, yep, they will hike in the States, but it doesn't mean they will hike here in Australia. And of course, that is coming around already, believe it or not, next week.
It is.
We've got the Governor, Governor Philip Lowe, speaking in front of his Economics Committee this week. But anyways, I'm getting ahead of myself, as per usual. Let's just reflect on some of our major performing sectors today, and look no further than the REITs. It was actually the best performing sector, Kyle.
Interesting. I don't know why that would necessarily be. I mean, it was a broad-based rally, wasn't it? It was 9 out of 11 sectors finished higher. I don't know if we're less worried about property anymore. I'm not too sure. But
I don't know.
One-way traffic there, certainly for the REITs.
Yeah, the miners were also looking pretty good. We saw Dalian iron ore futures up at one point about 4%, so capping off the rally that began late last week. Again, I had a chat with David Lennox from Fat Profits. He's still a hold on a lot of these iron ore stocks, even though there does seem to be a bit more positivity coming from property in China. And really, he puts that down to the valuations of some of these local iron ore miners. You know, there's the share price isn't really, you know, potentially offering much value when you get in. So there's a little look there. And even though gold came under pressure today, look, David's still really favorable on the gold miners toward the end of the year. So yeah, again, that interview's up online as well.
Yeah, and let's get to the banks now, because it was another broad-based rally for the banks, and had a really good conversation with Nathan Zayer. I don't know if he's been on before, actually.
Yes, he has.
He has been? First time for me.
Not for a while.
Not for a while, first time for me. Had a really good chat just about the bank valuations right now, you know, because there's that whole sort of story around peak credit growth, peak margins, all those different things. So it picks that apart. But today, well, if you look across the board, it's not anywhere near the highs of last year. But of course, everything has to start somewhere. And he favours Westpac, actually.
Does he? Okay.
As the most fairly valued bank right now.
Interesting, because I spoke with Leighton Roberts from Sharesies, and he said that there's a big sell on ANZ. Oh. For example, in the banking space. But Macquarie was a standout today, up by 1.5%. The healthcare sector was looking pretty solid. CSL, you know, just the weighting of some of these companies on the market. I would venture to say that's not right for ResMed, but maybe a little bit of a data glitch. CSL, as I was saying, market weight, when it's up by 1.6%, it helps lift the broader market. You know what was the laggard today, Kyle?
I do. Consumer discretionary. We'll have a look at the retailers now, and they're all up. But we'll get to the story as to why consumer discretionary was down in a minute. You can blame the Canadians. I'm going to blame Trudeau. Is that woke Trudeau? I don't know. Anyway.
Trudeau. I'll correct you, Rhoda. Anyways, let's get to some of our top corporate stories. And this is your time to shine then, because it was IDP education. Lots of people were asking why it was down so significantly. Yeah. To start the day, there was no material announcement made to the company. So eyes all went to Canada. And
so often does around here.
So what Canada has done is they have, I get that, they have basically opened up the competition in some of those student areas of the market that IDP really has dominated in a lot of these markets. And that took the wind really out of its share price.
Yeah, I mean, I'm sort of, I actually own this stock, and because someone made a really good investment case for it a few months ago, and it's just that reopening story.
It's been one of the favorite, I think.
Yeah, well, it's that reopening story, right? But I mean, I think, when you look at a lot of value investors, they look for moats, right? And this company seems to have had a fairly significant moat. Canada has just kind of pulled down the drawbridge perhaps a little bit when it comes to that, because it's more or less opened up the sector to greater competition. And again, it'll accept other language tests for student visas. There was a bit of a monopoly that IDP had on that. That will no longer be the case. And I think it was UBS that it expects, I think, a 30% hit to revenues. Don't quote me on that exactly, but UBS does have a pretty important note out on this. And well, I mean, that's 5% down over the last year, but today the sell-off was about 15%.
Yeah, it was very, very sharp. In fact, so sharp, I mentioned that it didn't put out a material announcement to the ASX, and it got slapped with a price query saying that AEL, it says, has been not made aware of any information concerning it that was not previously announced to the market, which, if known, could be an explanation for the recent trading activity in IEL. But I think that's the thing, is that when you are, the favored, the incumbent, you're always at risk when it comes, and whenever we talk about education, health, there's that regulatory risk, which is, it can be really severe when it rears its ugly face. So that's IDP. ALQ, so that's the ticker code. I always say ALQ. It's actually ALS is the company name. So it's testing, it's in lab, it's in medicine, it's in mining. It's got its finger in a lot of pies. When you read the report at first, it looked very solid. I mean, net profit was up, underlying net profit, dividend had been increased. It was talking about strength in all of its divisions. It talked about margin expansion, all the rest of it. But I went through it again, and I thought maybe it was because it didn't give an explicit outlook guidance going forward. I don't know. Have you seen anything different?
No, not really. And it's not a company that I follow too much typically either. So I don't, sometimes it's just a kind of a vibe situation, isn't it? It's like, things were feeling pretty good, and, it just, nothing could possibly meet the high bar that was set for it. But I couldn't even really get a sense of that necessarily. But it is down quite considerably, of course. Hey, we've got a Twitter page. If you've got a better idea, let us know. But nevertheless, it was a good result, and it was belted.
Yeah, well, we actually brought in the experts on this one, Kyle. So it was the stock of the day, Daniel Ortiz from Stock Doctor and David Lane from Ord Minnett. Let's listen to what they have to say.
This business will struggle to grow unless it has some further increase in capacity and demand in that commodity segment. So for that reason, we're probably leaning towards a hold on this stock. Having said that, if you start to see some acquisitions come through, then there will be upgrades to come. So certainly keep it on the watch list.
The result was actually a very good result today. Shows some strong growth. But as Daniel said, I think it's probably the best year is behind it. Our forecasts are that they'll have some fairly flat earnings in the next 12 months. And what we've seen in the mining services area is that, yes, there's been a lot of activity as far as existing mines are concerned, but hasn't been a lot of investment in new mines. So the growth trajectory is relatively flat there. As Daniel said, in the margins in the life sciences haven't been as strong. So we actually think from a valuation point of view, the stock's been trading too high. We've actually got a sell recommendation on it. Our valuation on the stock is about $8.40, so still well below where they're currently trading at. And we have seen the share price weaken a little bit recently, with I think other investors looking at taking some profits as well based on the previous strength in the price.
Well, that was a pretty good explanation,
Yeah,
I thought.
there you go. We aim to bring you the answers. Just come here, ausbiz.com.au. You know who else has some answers for us? Josh Gilbert from eToro. Welcome to the COB, Josh. Thanks for joining us. What do you make of today's rally? How much of that is down to the debt ceiling? How much of it was just enthusiasm from Friday? And, what happens now that we've got U.S. markets shut for Memorial Day?
Yeah. Well, look, I think plenty of it obviously comes from the stronger lead from Wall Street, no doubt about that. It was a pretty good week for the Nasdaq, all in all, up more than sort of 2%. And obviously, we came off a pretty poor week last week as well. The debt ceiling news obviously helped a fair bit in terms of that tentative agreement in place. It takes away that little bit of uncertainty for investors. Although I don't think really markets seem to bat an eyelid at the sort of the debt ceiling news anyway, sort of seem to brush it off to one side. But yeah, look, I think it might be short-lived. You mentioned obviously markets being closed in the US today. Futures have sort of come off since they're open. The Nasdaq opened up about 0.8% higher. That's futures now about 0.5%. So I think we may start to lose a little bit of that sort of steam. I think investors will sort of turn from that optimism of, okay, we've got a potential deal in place to, okay, will this deal actually come to fruition? Then I think they'll start thinking about that PCE data that came through on Friday. That was obviously came through a little bit hotter than expected. That's obviously dialed up rate hike expectations again. We went from a 15% chance of a hike last week to now at 65% to start this week. So I think investors will sort of quickly change that mindset from a bit of positivity coming from obviously that debt ceiling agreement to obviously, okay, inflation isn't coming down as quickly as we sort of initially thought, and as we know, that's going to sort of bring back those expectations of how much further have the Fed got to go when markets for a long time have now been pricing in the peak of rates.
We spoke about it last week, but would be also interested to see how much chatter is emerging on the eToro platform, if any data is available there. Just AI, it's the buzzword. Some have been joking today that it's a little bit like the dot-com bubble. You just sort of slap either E at the front of it or .com at the end of it, and it would rise. You're seeing a fair bit of interest there. Obviously, it's the buzz right now.
Yeah, it absolutely is. And I think, look, in terms of when ChatGPT came about, that's sort of, I think, really when we got that buzz sort of come through. We know that sort of ChatGPT can sort of write our emails, it can manage our money apparently, it can read our minds, it can do everything. But I think AI could also be saving your portfolio this year, right? And Nasdaq's up 27%, Nvidia is up more than 150%, Microsoft is up by more than 25% as well. So absolutely, we're seeing that interest. Interestingly enough, we're actually getting a lot of interest from the over 55s. There was an 86% jump in over 55s opening positions in one of the sort of AI related stocks versus Q4 2022. So whether that's C3 AI, whether that's Nvidia, Microsoft or Alphabet. And that was quite a significant difference to what we had between, say, our sort of 18 to 34-year-old users, which we only saw an 18% rise. Maybe it's because they were already invested in those stocks. Who knows? But basically, the idea here is that it shows that maybe the older generation are not missing this technology run. They're embracing these sort of technology stocks at a faster rate than what sort of the younger generation is. And I think that bucks the sort of the trend here for especially tech adoption, right? I think the stereotypes are that it's usually younger investors that they're at the front of this, and I think that comes from obviously the long runway that's probably needed with tech. Obviously, we're only seeing AI in its infancy, but I think it's a reminder that technology is a key driver and an opportunity for sort of everyone. But we're also seeing interest from AI in the sense that although it can be a great theme to invest in, investors are really being excited by the ability to be able to analyze, vast amounts of data, generate new investment ideas, and ultimately overcome what has been, biases against retail investors for sort of many, many years. So I think there's a lot of excitement from that side as well.
Yeah, Nadine's telling me every day that she's looking for the first opportunity to get rid of me for AI, so it'll be a huge productivity boost at Ausbiz.
No, not at all. What would we do without you and your sense of humor, Kyle? I don't think any AI bot's going to be that funny, intentionally or unintentionally. Okay, Josh, so the rest of the week, I mean, we don't have a lot really coming through from US earnings. Let's say that's sort of out of the market. We may have some further confessions coming from ASX listed companies, as we work our way towards reporting season, but it is still the macro very much that's driving things. If you think Aussie monthly inflation, if you think US jobs, I mean, it very much is still the rates conversation.
Yeah, absolutely. We're obviously, like you say, wrapping up earnings in US. I think we've got Salesforce is probably one of the biggest names to watch there. But I think, investor attention will turn to that sort of macro data. We've obviously got non-farms in the US this week as well, which I think will be obviously the last sort of key data point for the Fed, really. And then obviously this inflation data in Australia is going to be, sort of the last piece of the puzzle for the RBA. But before their next rate decision, obviously we had retail sales last week that came in a little bit sort of weaker than the market had expected, pretty flat for the month. And I think that is telling the RBA that that their rate hikes are having their desired effect. But previously they had said that they could raise rates as much as they have done because the consumers are remaining resilient. Savings are pretty high, but we're starting to see that the consumer isn't as resilient as maybe they have been for the last sort of 12 to 18 months, and that spending is ultimately starting to pull back. So that inflation data is obviously going to be sort of really key. And if that comes in hotter than expected, if it comes in a glaring difference there, then I think again money markets will change their expectations, because as we saw last month they were pricing in a pause, but we obviously got a hike. Expectations are for a jump to 6.4% from 6.3% last month. So it just does reaffirm that again, central banks have a really tricky task here to get inflation under control. It's not going down maybe as easy as they expected. And I think investors, importantly, are maybe sort of pricing in a lot of good news that we will see the end of rate hikes. This is the peak of rates, but it just seems that we're not quite getting there. We continue to sort of get a couple of more hikes. Obviously, we priced in another hike from the Fed now, as I said earlier. We now obviously got what was probably a surprise hike from the RBA last month as well. So if inflation does continue to sort of stay around these levels and doesn't come down, I think markets will be surprised. I think we could see some weakness if inflation isn't moving in the right direction, because that means higher for longer rates, and that means that we're going to see more rate hikes as well. And markets just aren't pricing that in right now.
Josh, really appreciate you kicking off the week with us as always. We'll let you get back to the rest of your day. Josh Gilbert from eToro.
Thanks, guys. Take care.
So, look, it's so funny when we talk AI, because every time we've got this level of enthusiasm in the market for a particular theme, whether that's crypto or whether that's meme stocks, it's always like, is this the .com bubble Mark II? So we'll see. Maybe we should get across some of the leaders and laggards right now.
Let's have a look. Starting off with the leaders, let's see if we get a little of that AI flavour to things. And, well, you could probably argue there might be there. BrainChip Holdings is always, I suppose, an inexplicable mover and shaker most days. And, well, you could argue it might be an AI play. Yeah.
Look, go and listen to that interview from Henry Jennings. He said that the chair had a lot of guts to come out and just speak very plainly at the AGM. Look, there's nary a day that we don't talk about BrainChip and scratch our heads as to why. The Charter Hall Social Industrial REIT, CQE, is one of those REITs that helped lift that sector higher. I can't see any news associated with it. Centuria Capital as well. We've got a bit of a broker note coming through, though, from apologies. Where's this from? It's from Simon Chan. Where's Simon Chan from? It's slipped my mind, but he's saying that Centuria Industrial REIT and Charter Hall Long Whale REIT appear to have the weakest he's from Morgan Stanley, amongst some of those REITs on the ASX. He does say that they have assets that would interest buyers. So just talking about, we've got all those debt costs that are pretty risky for some of these companies, but saying that they also have the most desirable assets. We got there in the end with that one there, Kyle.
Yeah, and you can see a gold play there actually, but mostly rare earths also rebounding. I guess you could probably just chalk that up to the fact that we have seen commodities moving high, generally speaking.
UBS actually lifting the price target for Linus as well today by 2.4% to $6.80. Laggards, what helped... Well, I guess didn't
We've knocked
overall.
off two of them already, haven't we? Down 15.5% IDP education. So that's a pretty painful day for investors there. Well, I guess wait for the brokers to come out now, and also hopefully the company as well to provide some further colour on that, because you did see that, or read a little earlier, a press release from the management there, but
it was a bit of a, they got a speeding ticket. Well, not a speeding ticket, the opposite. They had a price query come through. Megaport, just before we lose it, I just thought I'd point out that it's been raised to buy from a neutral by Citi today. Price target lifted by 5% to $7.40 per share. Still not enough to give it a boost, and that's even on a day that, generally speaking, tech did fairly well. So that's an interesting one. Usually, some of these things follow those broker moves that come through from the big broking houses. And just a very quick look at some of those mid to small cap companies that were on the market today. Archer Materials, again, you could argue a little bit of a link there going through with the overarching theme, and Appen as well in the AI space, up by 12.5%. And look, let's see if any of Kyle's favorite companies are on here.
None of them today. None of them today, actually.
Yeah.
That's a new list, really.
Bit of a motley crew there. Not sure what's driving those prices. Look, tonight, not a lot.
Nothing. Which day in Germany?
Yeah.
Happy Wit Day.
Happy Wit Day.
And
the
Memorial
UK
Day.
is some sort of a bank holiday.
Yeah,
I did read what it was in
Wit
France.
Day as well.
Oh, really? Okay.
Yeah.
There you go. And Memorial Day is a big one. It's sort of the unofficial start to summer in the United States.
Summer
things
trading.
Get a bit more interesting here locally tomorrow, at least on the eco front, because it was so quiet on the macro front today. Nothing really.
No, not really. And to be fair too, the micro front was pretty quiet. But nevertheless, we'll start to see things pick up a little bit. Like you said before, Wall Street's not going to be open. We're not going to have much of a lead from, I think, either most European markets as well. So might continue to kind of hook into these debt talks because, well, we have one more hurdle to clear, which is getting it through Congress, which is expected to occur, I believe, or voted upon on Wednesday. So that might occupy a lot of that chatter still for a little while longer. Yeah,
I'm glad that we've got this Wesfarmer strategy day that we can at least look forward to tomorrow because, well, we get such a look into retail from Wesfarmers, consumer, where they see the consumer headed, but also now increasingly everybody's talking about Wesfarmers in regards to lithium, because it's really moving forward into that space and perhaps not being priced inappropriately by the market or so, I'm told. So we'll see what they say on that front tomorrow.
Yes, and we also have a very special event, I suppose for the industry, but we'll be there as well. I think we're sponsoring it, aren't we? The SIAA conference, so Stockbrokers Investment Advisors Association. Did I get that right?
I think you did.
Close enough. So we're going to be coming live from there.
How
with a few
can I
interviews
replace you with AI when you can ramble this stuff off with such ease?
Well, you don't know I'm not AI.
We are the media partner for that conference, and Andrew Gagan, our colleague, will be there throughout the day, bringing you, great interviews with some awesome guests. There's, panel discussions galore, really stuff that's pertinent to the industry itself, but also I think investors and David Koshi. You might know him, who's in the news a little bit
today, wasn't he?
Yeah.
The whole family, actually.
We're going to be sick of him.
Daughter-in-law Carrie.
Look, he'll be there, and he'll actually be speaking and moderating a panel discussion with Helen Lofthouse, of course, who's the CEO of the ASX. So really pleased that we are the media partners to that conference over the next couple of days. It's
going to be great. There's plenty of good content today, so you can catch up on that on your website and app. Otherwise, Noon, we reckon call it a day. We'll see you tomorrow.
Yeah. See you then. Great day on the market today. We'll see what happens tomorrow.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.